There we are, I think. So good morning and good afternoon, everybody, depending on the place you are around the world today. So my name is Bruno Cost and I'm chairing the AG. And as chair, I'm particularly delighted to welcome you to one of our regular webinars we are organizing and devoted to emerging themes around the ESG topics. Today, we will deal with the new international reporting obligations, which are now emerging, not only in Europe, but also in the States and elsewhere in the world. And I would like to thank particularly Charlotte Gard from the International Monetary Fund in advance for being our guest speaker today. Before giving her the floor, just a few words about the AG to remind you what AG is. The International Environmental Group, which is a non-profit organization. And as per today, IG is composed of around 50 members, including the largest companies in the aeronautics, space, and defense sectors. And IG becomes progressively, amongst other sectoral organizations, the recognized global forum for exchanging practices, collaborate on and share innovative environmental as well as ESG driven solutions. Here are some of the advantages of being involved within the IG community. First of all, being an IG members give you an access to a wide range of information about emerging global environmental regulations. Then concerning the voluntary industry solutions, it helps developing appropriate and effective solutions to meet aerospace and defense industry demand. Then also it is an opportunity to participate in good practices sharing between the members, sharing and learning about successful solutions and implementation schemes, and also reducing the administrative cost of compliance through collaboration and cost sharing. Finally, being part of a significant network, environmental and supply chain experts from around 50 aerospace and defense companies, large and small. In summary, IG addresses environmental and ESG challenges, business continuity, share sector objectives, sustainable growth, global tools, and voluntary standards. Should you want to join our collective effort towards responsible and sustainable aerospace industry, and for those which are not still part of IEG, I encourage you to apply for membership to our IEG website, www.ieg.com. So before giving the floor to Charlotte, which would be greatly thanks once more for being our guest speaker today, just a few words to introduce and give some few words on Charlotte's biography. Charlotte Gard is a climate change, energy and financial stability expert from the IMF Monetary and Capital Markets Department in charge of climate finance policy and technical assistance. Primarily in emerging markets and developing economies, sustainable finance policy work at global level, and climate risk analysis from a markets and financial stability perspective. Prior to joining the IMF, she was deputy head of unit of the Economic Financing Department of the French Treasury, in charge of sustainable finance and climate risk for financial institutions. In that position, she negotiated and drafted numerous EU and French regulations related to the private financing to the energy transitions, such as taxonomies, disclosures, risk management, and she was the rapporteur for Patrick de Cambourg Task Force on ESG data and disclosures in France, and then within the EFRAG, which is the standardization on non-disclosure agency at the EU level. She started her career in 2017 in the International Regulatory Affairs Department in the French Securities Markets Authority, where she was in charge of asset management regulations and financial stability international policy. She was held various teachings positions over the years. Charlotte holds a master's degree from Sciences Po Paris, the Sorbonne University, and Paris 2 Assas University in international and financial economics and securities and markets law. and she's also currently a PhD candidate in environmental and financial economics. So many thanks, Charlotte, for being here today, and I let you the floor on this intriguing emerging international initiative on financial non-disclosure.
Thank you. I hope you can hear me. I'm really excited to be here today with all of you, and I hope that the presentation will be as helpful as possible to your work. And I'm looking forward to the discussion as well. And thank you very much for the invite again and for the presentation, Bruno. The topic of our presentation today is on international non-financial reporting initiatives. So the goal here is to provide you with a panorama of what's been done so far and what are the next steps and the challenges in terms of transparency on what usually we call non-financial topics, climate being one of them and the most urgent one, obviously. So maybe first sort of give you the background as regards the reasons why most policies that have been implemented so far to green the financial system have actually relied on a data-driven approach. So why do we talk about disclosures? Why do we talk about taxonomy? What's the goal of all that? Maybe go back to the basic, let's say. The goal here, when we're talking about developing sustainable finance, is actually to comply or to obey with Article 2.1 of the Paris Agreement. And Article 2.1 of the Paris Agreement, which was signed in 2015 following the COP21 in Paris, is actually saying that you have to align capital flows on a low carbon trajectory. And so when we want to develop sustainable finance, we basically mean two things. It's like a two-leg approach. The first leg of the definition is ensuring that you effectively align capital flows on a low carbon trajectory. So that doesn't mean that each dollar or each year spent or invested has to be solely on the energy transition, for instance, but that every dollar you spend at the end of the day does not harm or does not make global warming worse than it already is. That's the approach of aligning capital flows on a low carbon trajectory. And the second leg of the definition is ensuring that the financial system is resilient to the physical effects of climate change, the acute and the chronic effects, and also to the transition-related effects of climate change. And so that's when all issues related to risk management, to prudential regulation, for instance, to financial supervision come into play. At the basis of all that, you need data, you need information, because how can you ask, if I present it in the most simple, and direct way possible, how can you ask the financial system to do anything if as a bank or as an investment manager, you don't know what the real economy is doing and what companies in the real life, in the real world are actually doing. And so for this, you've got disclosures. You have financial disclosures that have been around for many decades. And it's been a few years and actually been a few decades when it comes to the US, for instance, that you have non-financial disclosures. And so what you need now is not, just a breadth of CSR reports that give you an overload of climate-related or sustainability-related information, but you need data that is published in the same consistent and comparable way as financial data is published. So you need as much complementarity, so we call it connectivity in the financial regulatory world, between your financial data and your so-called extra financial data. Maybe a caveat here I want to enhance is the fact that when we talk about climate-related data, it's more and more financially related, because the financial materiality of climate change across the three scopes of greenhouse gas emissions is more and more pregnant, obviously. So we tend to distinguish in policymaking, in regulatory decisions, but also in real life, in the practical implementation of all that, the climate-related information from the other sustainability-related information. That doesn't mean that other sustainability-related information doesn't have any kind of financial materiality, financial importance, Obviously not. It depends on the wide array of reasons and foundations, let's say, but climate-related data is a bit particular in that respect. So the reason why I'm showing you this slide is just to emphasize the fact that if you want the right kind of data and the data that is useful for investors and for decision making in the financial world, then you need disclosures, because you need some kind of process that makes the data available, obviously, and as you know, as best as you can, disclosures stemming from the companies themselves. Not that you cannot rely also on data providers or on credit rating agencies that are, you know, progressively becoming credit and extra financial rating agencies, but you need the raw data that comes from the company itself. So that's why one piece of the climate information architecture is actually disclosures. The second piece is the data itself, but when I'm talking about data here, I also mean all issues related to data availability and to data reliability. So when I talk about availability, it's the fact that, again, you know, you have these very large, usually CSR, corporate sustainability responsibility reports that are published by companies. But the thing is that the data itself, the figures, the quantitative information, but also part of the qualitative information are, you know, not self-evident to actually collect from these reports. So you need greater availability of data. Also, the raw data that is even published by companies themselves, you need better availability. And so you can rely on information, you know, new information technologies, for instance, satellite information when it comes to physical risks, physical information, and all of these. And when I talk about data reliability, it's the fact that the extra financial data, or at least the climate-related data that you publish, has the same level of robustness and of auditability than financial data. And so you have policymaking in the area of auditing, in the area of providing assurance of climate-related data. And that's the second piece of the climate information architecture. And the third piece that you can see on this slide is the fact that, you know, if you want data to be comparable across industries and also within industries, you need some kind of understanding of what are the climate-related objectives, the transition plans, for instance, of companies. You need to understand what's the trajectory for decarbonization pathways. And a lot of this information is sector-specific, though some of the information can be found across sectors. But for investor decision making, you need, at the very least, sector-specific information. And so that's when the issue of taxonomies come in, and we'll talk about that later, more into depth later today. So hopefully that slide is a bit easier now that I've explained all of that. I won't go into too much detail on this one, and I think the slides will be sent to you anyways. But let's say that when it comes to greening the financial system, policymaking is not just happening on the front of information. Of course, there are many other regulations that you can either adapt or just adopt, from scratch when it comes to these priorities and to these objectives. So the European Union has been at the forefront of all that since 2017, 2018. It published actually an action plan for greening the financial system that you can see on the right-hand side of the slide that sort of includes climate progressively along the investor chain. So from the retail investor to the investment advisor to the rating agency to the bank, the credit institution, to the investment manager, to the financial supervisor. New regulations have been adopted, and some others that were pre-existing to the climate challenge, let's say, have been adapted actually to include this climate, the need to take into consideration climate change, I should say. Of course, disclosure is not an end in itself. I mean, it's presented a lot as if you were to have the most perfect disclosures that would like magically just change the whole system and make sure that every investment would go from a very carbon intensive activity or technology or process to a low carbon one. Of course, things are much more complicated in real life, also because, for instance, in the energy sector, you cannot have full complementarity between a fossil fuel company, for instance, that wouldn't have any kind of low carbon technologies or processes already integrated into its business model, and low carbon companies like renewable energy companies, for instance. So it's not as easy. I mean, you wouldn't have just a portfolio rebalancing going from one type of company to the other. That's the first thing. And the second thing, I mean, there would be many elements to say about that, but is also that you have to make our carbon intensive world transition from a carbon intensive foundation to low carbon ones. So you need also to change companies within, and that's how a lot of financial instruments, for instance, are developing to ensure that you also transition or incentivize the transition within carbon intensive companies, and a lot of policymaking is also done in that area. But let's say that as of now, most, not all, but a lot at least of the regulatory effort has been made on what we can call that informational policy. And of course, there are many debates around that, and debates around the fact that disclosure might not be the holy grail. It's actually just a prerequisite if you want to then change more regulations, but also incentivize as to whether or not you finance the transition within a company or within a sector. So now let's take a bit more into the disclosure topic, because that's the the angle that we are choosing today. So disclosures have been around for a long time. Extra financial disclosures, actually, the United States had already a disclosure rule when it came to natural disasters and some other climate-related topics in the 1970s. All of that is not new. But let's say that purely focused disclosures on non-financial topics, broader than climate and broader than just natural disasters, which are only acute effects from climate change, but not encompassing the array of physical effects that you might have from climate change. It's been happening mostly in the EU so far. So there was a non-financial reporting directive adopted in 2014, so about 8 years ago, that was recently amended to incorporate new policy priorities and make sure that you have a larger set of companies actually disclosing on these extra financial topics. And we'll dig into that at a later stage. Maybe going back just to the rationale for mandatory disclosures, because a lot of the disclosures that were happening before the NFRD in the EU, for instance, were mostly voluntary disclosures. In France, for instance, was not the case, but in lots of EU countries it was the case, and outside the EU as well. The case for mandatory disclosures lays on the fact that you need to embed climate-related information into the company strategy, and you need to make incentives shift for filling the gap in terms of private capital for climate change mitigation and adaptation purposes. And the thing is that if you don't have mandatory disclosures across a series, not a series, but I would say volume of companies that are relevant in terms of their contribution to climate change today, then otherwise you have agency-related problems, and you have moral hazard problems stemming from the fact that it remains only voluntary. And another issue as well from having only voluntary disclosures is the fact that then you of course cannot compare companies within the same sector or across sectors, and the data that is published might change even within the same company from one year to the other, depending on the scope that is chosen for reporting, and depending on many other aspects. So you need to have sort of this design for mandatory disclosures that share at least the same foundational principles in design to ensure better comparability of data. And that's the fact, for financial information, of course. Of course, you have several norms applying. You have the IFRS standards, you have the US GAAP and other kind of accounting standards, but at least a company operating on both sides of the Atlantic can understand, what are its sources of revenues or other aspects of accounting norms that have to be comparable. So you need the same objectives for extra financial information, and especially for climate-related information, for many reasons, given the urgency of climate change, obviously, and given the financial materiality from a risk perspective as well of climate change. So several of these requirements have been deployed, let's say, all across the world, mostly so in advanced economies, what we call advanced economies at the global level. So in the EU, in the UK, since the UK left the EU, it has adopted quite a similar disclosure rule for listed companies. In Switzerland, it's coming up soon. In New Zealand, in South Korea, in China, and in Japan, and most recently in the US with a rule proposal by the Securities Exchange Commission. So There would be plenty to say on the differences across these frameworks, and I'll have a couple slides about that. But let's say that all in all, it goes into a similar direction, or at least a similar shared objective, a broad objective of providing greater and more comparable and robust climate-related information. So maybe to have a zoom in onto countries or onto areas, first on the US side and then on the European side. So the SEC, as I said, had long-standing guidelines for extra-financial reporting when it came to specific environmental aspects. And actually in 2010, the SEC had published let's say, series of guidelines for climate-related disclosures. Later on, following COP21 in Paris, the Task Force on Climate-Related Disclosures was created, and Michael Bloomberg was chairing it. So it was a private sector-led task force, and the recommendations of these task force on climate-related disclosures have been published in 2017 and have been endorsed by a series of governments and financial institutions and companies across the world. So all of this happened in 2015, 2016, 2017. And I just want to stress, because, a lot of the time we say that the US are behind in terms of climate-related policy, but actually in 2010, the SEC's rule, not the rule, sorry, the guidelines that were published on climate-related disclosures were anticipating a lot what the TCFD later on did. So it was already very ambitious, actually, especially considering the time. We're in 2010 only. So, of course, these were voluntary and not as ambitious as the rule proposal that has been published a few months ago, but still, I just wanted to stress that that's important, because that shows that there was, longstanding administrative tradition when it came to extra financial reporting. So the SEC's rule proposal is extensive. It's about 500 pages, and a lot is dedicated to the cost-benefit analysis, also in order to overcome some legal challenges and constitutional or even let's say, constitutional challenges that may arise from the actual publication and implementation of that rule down the road. But maybe just to give you a few insights into what's inside that. So the rule is suggesting mandatory disclosures for a very large scope of companies across the US, and extra financial disclosures that have to be published as part of your financial statements. So the connectivity with financial information is really important there. Also, because the so-called materiality principle that is adopted by the SEC is what's called financial materiality. So you only publish the information that has a financial importance, let's say, for your company. But this it's differentiated with what's being adopted in the EU, but also in some Asian countries, for instance, with what we call dual materiality principle. So you also publish information on the impacts that you have on climate change, for instance, or other sustainability-related topics, though they're not right now, at least, financially material for your company. So in the US, what's been proposed so far by the ECC is purely from a financial materiality perspective. I can talk about that later, because when it comes to climate change, actually publishing across the three scopes of emissions is kind of the same if you were to have financial or extra financial materiality anyway. But it's important, the difference in materiality principle when it comes to other sustainability related objectives. So these rules, actually where it's interesting is that it's a lot of detailed information on the four pillars of the task force on climate related disclosures. So on strategy, on the metrics and targets that you adopt, on the governance, and also on risk management. So it's following the TCFD recommendations quite closely. It's going beyond them for a lot of topics. A lot of the emphasis also is happening on the transition plans and the use of scenario analysis. So companies, if they are using climate-related targets, or if they have set some sort of climate planning, they have to publish a transition plan, and they have to make sure that they use scenario analysis in the most, let's say, robust way possible. A key topic to have in mind also when it comes to the SEC's role is the fact that emissions have to be published across the three scopes, and for scope 3 emissions, so your indirect emissions from the services and the products that you sell, have to be published only if they're deemed material for the company's business model and activity, or if the company has published climate-related targets that embed these scope 3 emissions. So there's a caveat there, which is in this sense really different from other frameworks that have been published or will be published either in the EU or internationally. That's the issue of scope 3 emissions. I hope that's clear. I have to go obviously a bit quick on all that, but I'd be happy to take questions afterwards. About the EU, it's slightly different. The EU is what we could say probably more ambitious, also because the scope of companies that is embedded into the new directive that is being signed right now, I mean adopted right now, are all companies above 250 employees, whether they're listed or not. So that's quite a large difference with what's happening in the US, for instance. And listed small and medium enterprises are also concerned by this extra financial reporting. In the EU, there's a lot of focus on assurance and on the fact that you need limited assurance as a first step, and that the level of assurance that you may require would evolve over time. And it's mostly also on content that is really different. The transition plans that are required are probably more ambitious from a science-based perspective, because they're asking for much more climate related targets for scope 3 emissions in all cases, time bound targets as well, and leaving offsets on the side, and making sure that you obey by the principles that have been laid out by the IPCC standard. And a second difference regarding content, the US proposal, is the fact that you don't only have, let's say, a regulation that asks you what to publish broadly, like the ACC does, for instance. You also have a standard that is being adopted right now and published, I should say, right now by the EFRAG that Bruno referenced earlier today. So you don't only have the regulation with the requirements, but you also have the standard. So, and when I'm speaking about standard, I mean thematics for disclosures, KPIs, key performance indicators, sub KPIs even sometimes, and the methodology, the metric to publish against these KPIs. So it's much more specific, let's say, than what the US suggested. Sorry, I won't go into detail on the phase-in application. It's on the slide, and I mean there will be plenty to say on the technical level, but I want to leave the floor open for discussion in a second stage. Of course, something that you may think about hearing me today is the fact that if there are already quite a few and important sometimes discrepancies across, between the EU and the US framework, there may be more when you take into consideration other disclosure frameworks and regulations that have been published outside the EU and the US. So I showed before that in Asia primarily, and also in the UK, Switzerland, for instance. So how can we go towards a global baseline? Because indeed, I mean, there are several discrepancies that I'm showing here on this slide, and I won't go into too much detail, but let's say that when it comes to the scope of companies, there are lots of discrepancies as regards their size, but also the fact that they're listed or not on public markets. When it comes to the location of extra financial reporting, most existing frameworks would actually have a dedicated section in the management report, and the connectivity with financial information would be key. But mostly in the EU and the US for the latter. I would say that on content, that's where you see most discrepancies. So let's say that the US are probably, I mean, the US proposal is probably slightly more ambitious than many non-US frameworks, except for the EU framework, because it tackles, a lot on transition plans, on compensation policies, on scope 3 emissions as well, but still lacking on many other topics. The materiality principle is probably one of the most fundamental differences. So the application of a single materiality versus double materiality differs a lot across the frameworks, and only the EU, the UK, New Zealand, and Switzerland right now would actually adopt that dual materiality principle. In terms of assurance as well, you have very little detail in most frameworks, except for the EU and the US frameworks. So that was just to give you an overview here. But then, of course, when it comes to financial accounting, you have the IFRS norms. So very rapidly down the road, when all these policy makers discussions were happening on extra financial reporting, the fact of having a global standard setter was mentioned very rapidly, and the IFRS Foundation was not quite keen at the beginning, let's say, to go on that front, but took very rapid decisions in that regard. And so the International Sustainability Standards Board was created as part of the IFRS Foundation last November during COP26 in Glasgow, and has published what we call exposure drafts. So let's say drafts for standards for sustainability-related disclosures, so like a general standard for all kinds of sustainability-related disclosures, and a draft specifically for climate-related disclosures. And so the IMF is participating to the ISSB's work, and of course a lot of comparison has to be made across all existing frameworks. So here I'm showing you a slide where I'm trying to be as clear as possible on where the ISSB's framework is sort of more ambitious or providing more details or trying to be more specific, for instance, than the SEC framework. So you see that there are divergences appearing already between current norms or proposals, at least at the jurisdiction level, and the global standard when it comes to governance, when it comes to how you embed as a company your value chain, when it comes to the type of risks that you include in your reporting, when it comes to the materiality principle again, and when it comes to the transition plans and the content that you require for publication by the companies on their transition plans. There are several key, let's say, differences between the ISSB suggestion, so what would be down the road the global baseline and foundation for all kind of extra financial reporting, as long as countries endorse the ISSB standards, and existing jurisdiction-based standards. So this is something to have in mind when it will come to the implementation of all that, because usually all of these differences is what I would call the elephant in the room. I mean, everybody says that we need interoperability, that we need as less fragmentation as possible, but there are fundamental differences across jurisdiction-based frameworks, as you saw, for instance, between the EU and the US, but also New Zealand, South Korea, China, Japan, and many more countries. And also when it comes to the differerences between the global framework that is being suggested today, and it's open for consultation right now, and jurisdictions based frameworks. So these differences happen when it comes to transition plans. As I said, I won't go into too much detail, but let's say the level of granularity of specifics that you ask from companies on transition plans is really diverging between what the EU's been asking and what the global or the US framework asks as well. You see that also when it comes to measurable targets for mitigation and adaptation purposes. Again, I won't have time to dig into that too much, but let's say that a lot of the differences that you can see, and not just between the EU, the global standard, the US, but also other standards outside the EU and the US, are related to the, let's say, place that you give to greenhouse gas removals and to carbon credits especially. So that's a big difference. So of course, there are many key challenges related to that, not just related to fragmentation, but related to how do you publish, for instance, and verify, especially forward-looking data and metrics, because obviously that's going against what's been done so far in financial reporting, especially. So that entails a series of challenges related to the sensitivity of information you can actually publish, related to your Scope 3 emissions, related to the way you anticipate some changes in transition policy, in demand, and also in the broader macroeconomic and energy policy context, for instance. There is obviously the technical issues related with measuring Scope 3 emissions, including financed emissions when it comes to financial institutions disclosures. And of course, in many sectors, Scope 3 emissions are the most important, obviously. And you can see that on the graph on the right-hand side. So all of these topics are really important in sort of like making the debate right now in the financial regulatory policy world. I won't dig too much into that, but I just wanted to include that slide for further reference because I referenced the fact that the SEC's rule proposal is obviously not adopted yet. It's under consultation, but it's facing quite a few important challenges on the legal and constitutional front. So here you will have the references. Maybe going quickly, because in my view, that's a very important topic, but actually related to disclosures. So I didn't want to make the whole presentation about taxonomies because I've done that so many times myself before, and I know that it can last for an hour when it comes to taxonomies. But at least giving you a few insights about it, and especially when it comes to the relation between disclosures and taxonomies. A few important legal papers are right now pointing out the link that you have to make between those two elements and those two pieces of the climate information architecture I was referencing earlier today. So what do we mean by taxonomies? If you're based in Europe, you've probably heard about the EU taxonomy for a few years now, at least a few months because of political challenges related to it and to the energy sector more specifically. But actually, taxonomies have been developed all across the world, not just in the EU. There are about 30 taxonomies right now, most of them being developed in emerging markets, developing economies, even some low-income countries. You have a taxonomy in Bangladesh, as a matter of example. Most taxonomies that are developing outside the EU are developing in Asia, but also in South America. And the IMF provides a lot of technical assistance to countries, actually, or regions, especially developing their taxonomies. We tend to say that a taxonomy is defining only the green. Actually, a lot of these taxonomies, and the EU is one of them, that has a very broad sectoral coverage. So it's not like the Chinese taxonomy, for instance, that is what we call a whitelist approach. Like it gives you the greenest activities possible, and the taxonomy, the classification is used primarily for green bond issuance purposes, for instance. In many other areas, the EU included, but again, not only the EU, the taxonomy serves, if I can just simplify it and synthesize it this way, as a bridge between your long-term strategy as a country, or even your nationally determined contribution, if it's trying to be Paris aligned, that you give to the UNFCCC, and the needs for that you evaluate for providing private climate financing to your country in some key sectors for climate change mitigation purposes or climate change adaptation. So the taxonomy sort of serves as the bridge between the two. So it's a roadmap for financing, and usually it gives you what we call the green thresholds. I mean, even the most carbon intensive sectors you might think of, it gives you a threshold of greenhouse gas emissions to be considered as aligned with the taxonomy that is obviously not reflecting the reality of the sector today, but is telling you what you should reach tomorrow. And so now most of the work is focused on transition. So we know we live in a very carbon intensive world. How do you go from that carbon intensive world to a low carbon world? You have several technologies, processes that you can include in every single industry. And so you need pathways. And so now the goal of these taxonomies in the EU, in Asia, and South America is to provide not only the endpoint to be reached, because, there is some usefulness in providing detail on how you are aligned with the low carbon world tomorrow, but you need to have more details on how you want to be aligned on that low carbon world and what you are putting in place to do so. And then the reporting you can give about it is actually helpful for financial institutions to provide the kind of financing that you need to decarbonize some of your industrial processes, for instance, on some of new technologies that you need to substantially decarbonize your activity. So that's where taxonomies are most helpful. And initially, they were published to be anti-greenwashing, let's say, classifications, but their role has stemmed way beyond that in most economies. I just wanted to point that out as a general comment about taxonomies, because again, digging into the specifics and the characteristics and the design challenges of taxonomies and usability challenges would require just an hour in itself. So I just want to be quick on that. Maybe showing you this map, for instance, because you see, and it's just a little bit outdated, and I should update it, but showing you that taxonomies have not been only happening in the EU. And actually right now, maybe tell you that we are providing, for instance, the IMF, a lot of technical assistance to the Asian, Southeast Asian region and to Latin America and the Caribbean to implement their so-called regional taxonomies. So taxonomies can have a variety of applications, and the link I want to make here with reporting is important. More and more in the EU and in Southeast Asia, especially in the EU, it's been done for quite a while in the regulation itself, and it's being applied right now. There's a link between the taxonomy and disclosures, meaning that you are asking companies to report on the ways they are right now complying with the taxonomy and what they plan to do to obey by the taxonomy's principle at a later stage, tomorrow, in 2020, 2030, 2040, 2050. And so let's say the new thing right now is talking about transition plans. You need to embed your transition planning into your company strategy. And the more information that investors have about your transition planning, the best they can financially help you out, let's say, to finance it, if I say it in a very general and synthetic way again. But there are other applications of use of the taxonomy in the EU. That's what you can see on the left-hand side there. So when it comes to standards for financial instruments or financial products, but also to prudential regulation for banks, reporting is one of them. And also in the EU recovery plan post-COVID, you have references to the taxonomy and to a principle that's called the do no significant harm principle, which is really important in the taxonomy itself. I don't have time to dig into it, but hopefully that gives you a bit of hints as regards the role of the taxonomy in the EU financial regulatory system. So discrepancies across taxonomies are obviously very important. I won't dig into them either because we don't have time and I don't want to bury into that. But of course, because there are discrepancies in national plans for climate mitigation, because there are discrepancies as regards the to be brought to some countries and to some key sectors, because you don't start from the same point of departure, whether you are the Philippines or the United States or the European Union. Then you have discrepancies across the taxonomies, because again, they act in most cases, let's say, as a bridge to make sure that, as a bridge between the long-term strategy of the country and what the financial sector can actually do to provide the capital where it's most needed. So that explains a lot of the fragmentation across these frameworks. So what about the way forward? I think today insisted a lot on what we call interoperability challenges. So you have fragmentation because up until recently, most of these frameworks were voluntary frameworks and were not, let's say, adopted by the public sector itself, and there was no international discussion across jurisdictions to make sure that you had as little as fragmentation as possible. So now it's a huge challenge, because you can obviously say from a very political perspective that you will have a global standard if and the G20, the G7 are advocating for that and have been advocating for that for quite a while now. But if you don't address the actual differences in these regulations on both sides of the Atlantic, for instance, it remains nice to say that you want interoperability, but in application that won't work. So you need to address these differences by making sure that you have the right foundations, at least, and everyone shares the same foundations. It's really important for multinational companies, obviously, given that reporting will have to happen on both sides of the Atlantic, for instance, and in so many other countries. So you need as little fragmentation as possible. So work is being done within the ISSB, so that international standard setter for extra financial reporting on the topic. It's just being started, so I cannot really specify anything more than what you can see on this slide. But let's say that, again, the need to tackle the elephants in the room, which are, for instance, the materiality principle, the fact that some frameworks ask mandatorily, like the ISSB and the EU, for scope 3 emissions and not the US, for instance. So you have these large discrepancies that need to be addressed. So in this context, and I'm sorry because I think the slide is a little weird here, but hopefully you have a better version in at a later stage. But the IMF does a lot of work when it comes to policymaking, participating to global work in financial supervision, but also in let's say, policy in that area. On taxonomies, we are not aiming for global taxonomy. That doesn't make sense for so many reasons, because every region, or even country, but especially region, has its own objectives, has its own industrial structure, has its own private climate financing gaps, and has its own point of departure. But at least you need the same foundations across these taxonomies in terms of their science-based nature, in terms of the definition they make of carbon neutrality, for instance, that has to be science-based, in terms of disclosures and reporting and all that. So we've been working on a project with the OECD, the BIS, so the Bank of International Settlements, and the World Bank, to provide that guidance, that very operational guidance, to make sure that you have less fragmentation as possible across taxonomies there. And it won't be just a nice report. I mean, we'll use it in our regulatory technical assistance work and policy making more in the global arena as well. And that will be published soon, next October probably. We are participating also to the ISSB Sustainability Consultative Committee in that area, putting a lot of emphasis on the needs to address emerging markets and developing economies needs also, and the specificities there, since it's most of the IMF membership, obviously. I won't dig into that because you'll have the details on what we are doing, and I just want to go to the questions and, of course, to have a discussion with you. I think that's most important. I think I took a bit too much time, so I'm very sorry about that. I thought it could be much shorter, so I hope that was still useful and understandable, at least, giving you that overview. And I'm eager to hear about your questions. Thank you.
Thank you very much, Charlotte, for your really comprehensive lecture. So we open the floor for questions. So you have on the left side of the screen some place for putting some questions, and we will, from the place, select those that will be posed. So we have less than a quarter for questions. Maybe I will start with the first one. So I understand from your lecture that beyond the key requirement on disclosure, the key issue will be also the data that should be reliable and consistent. Just the questions how to allow some comparison between, I would say, the different regions, meaning the states, the EU, and maybe other countries, if there is no imposition on methodologies to obtain and calculate the relevant data.
Yeah, no, thank you. You're asking probably one of the most important questions. What we're advocating for is to have methodologies actually on at least the most, let's say, preeminent topics on climate, on greenhouse gas emissions, for instance, or also on energy efficiency, and climate-related topics. And the ISSB right now has suggested a lot of the SASB guidance, which we believe shouldn't be mandatory to be used, considering the breadth of other methodologies out there. But at least referring to commonly, let's say, international methodologies. Commonly used international methodologies when it comes to greenhouse gas emissions, and their reporting, their reliability, and also other topics related to energy, especially, is in our view very important. But then the thing is that most of these frameworks in the EU, in the US, in Asia, they would not only provide the methodology itself, but also ask for reporting against existing regulations, like sector-based regulations, usually when it comes to climate, but also to biodiversity, to circular economy, to pollution, to all of these topics. And usually these regulations are regional or even national. So the US have their own regulations when it comes to circular economy. In the manufacturing sector, in the EU has its own. So how do you align that? I think that's the goal of the ISSBs right now, and that's jurisdictions working group. We must make sure, and that's an IMF point to say, we must make sure, that you have, for the most preeminent topics, the same methodologies, or at least the same metrics also that are used, because usually the metrics differ as well. I hope I answer that. That's obviously ongoing. Yeah. So, and at the end of the day, that is actually really political as well, obviously, especially when it comes to Scope 3, for instance.
So many thanks for your thought on that. I open the floor for questions. Do you have any kind of question you would like to ask to Charlotte, please? So if you have the floor on the right, on the left side.
Do you want me maybe to? I see some with a high priority. I can address.
Yes, this is what we could. If you are seeing those on the, yeah, go on. If you are seeing those on the high priority. So
well, first I
there
can
is
answer
one.
To Maxine.
Yeah,
sorry,
there
go
is
ahead,
one.
go ahead.
So there is one from Antonin Deschênes, which is highlighting that aerospace has remained for now excluded from the European Green Taxonomy. What about the other taxonomy and referential, especially the SEC?
So I'd say several things about that. First of all, indeed, in the EU taxonomy, there is actually, how do you call it, like air infrastructure, but not the aerospace industry as a whole. I think a few sectors are still missing, like the mining sectors as well, for instance. I'm thinking about the fact that the EU taxonomy has a very broad sectoral coverage. I mean, if you give the EU taxonomy to someone in the street and you tell them that's what the EU thinks is green, probably the person will not really understand, as it will see a lot of very carbon intensive sectors in there. But what the EU taxonomy does is giving you, again, the threshold for greenness, let's say. And that's why when you look at the direct sources of greenhouse gas emissions in the EU, and I'm really talking about the direct ones, about 90% of these sources of emissions are right now included in the taxonomy. Because as a cement company, for instance, you have cement in the taxonomy, but then again, it doesn't mean you're aligned with the criteria. So aerospace is one of the industries missing to sort of like fill that gap to almost 100% of direct sources of greenhouse gas in the EU, though you actually take out coal and lignite and oil. But that's something missing indeed. So let's say that in the other taxonomies, usually the aerospace is not in there. But I would say that it's actually, I mean, because the other taxonomies have been developed mostly in emerging markets, that kind of makes sense because again, if you try to think outside the EU framework, which is super specific, political, it's a regulatory tsunami. I mean, it's almost like a different thing in itself. But if you look at the other taxonomies that have been developed in other countries, again, they act as this bridge between the long-term strategy of the country when it comes to climate mitigation adaptation and where you need support and where you need private capital coming in. So most of the sectoral coverage is actually where would be related to the sectoral priorities for these countries. But that said, indeed, considering the aerospace industry, it would be important to have that in the EU and in the US taxonomy that were to exist. But there's no US taxonomy. In the US, and I'm planning to publish any kind of taxonomy mostly for political reasons. But let's say that in the SEC's rule, a company has to publish. So that's the difference I'm making between the need for disclosures and taxonomies, where there are some disclosure requirements attached to it. And indeed, any aerospace company that is within the scope of the SEC's rules, so most of them would be, at least the largest ones, would have to publish the greenhouse gas emissions, including the scope 3, because it's material to the aerospace industry, for instance, or other kinds of elements. But again, there is no taxonomy in the US, so that's one of the differences as well.
Many thanks for the answer. Just there are several questions related to the slides. Yes, the slides will be circulating. And beyond that, you will get also the record of the webinar on the IAG website. So there is a question that relates to the role of IAG. So given the increased fragmentation, what advice do you have for IAG regarding our effort to establish a common framework for ESG reporting for the aerospace industry?
Well, the first thought I have is to engage with the ISSB itself, and to the IFRS Foundation, and also to you'll have the slides, so you'll see like the ISSB created that jurisdictions working group. So basically, they asked representatives from the EU, the UK, Switzerland, Japan, China, and one other country I'm missing, but anyway, to come together around the table and try to address these differences. And so engaging with the US and the EU, especially given the aerospace industry, would be really important as well in that space. But I would say that the ISSB would be the most where most effort should be concentrated, and it's really important in this regard. That's my unique real advice, let's say, because that's actually the global standard setter. So sector-based frameworks will be published in a second stage. I should have said that before, actually. So at the end of the day, there may be, I think there should be, and there could be a sector-specific standard, global standard for the aerospace industry. So apart from the sustainability standard that is being published right now, the climate, specific standard, there will be other environmental objective standards like biodiversity, for instance, and social, but then they will be sector specific. So that's when also engagement should happen with the ISSB.
Okay, many thanks for that. We understand that there is a role to play for EG, liaising with ISSB. There was a question about the rating agency. They are a traditional rating agency. So the question is, are traditional rating agency integrating extra financial data in their ratings and reportings? And secondly, what about the role of sustainably related rating agency? And do they have any weight?
Well, actually, most sustainability rating agencies have been bought out by traditional rating agencies. So the two are beginning to be more and more integrated together. And indeed, traditional rating agencies are integrating extra-financial data in their ratings and in their data provision, and especially climate-related data, because climate change is financial material for anyone, for many reasons. It's of course a bit different when it comes to sustainability reporting. So other sustainability related topics, but at least when it comes to credit rating, for instance, a lot of the biggest rating agencies are already integrating climate change data in their ratings, even in purely financial ratings. And extra financial ratings are being also standardized a little bit. I mean, not standardized, but there is a lot of transparency requirements coming in for these rating agencies as regards their methodologies when it comes to extra financial ratings, including for climate, because we see a lot of discrepancies for the same company, for instance, as you may know, with extra financial ratings. So there needs to be more transparency on this front. So a lot of work is happening, policy work is happening in that area.
So maybe we have just time to have the last questions that is relating to the enforcement. The question is: there are still companies that think this kind of reporting on non-financial disclosure is optional, and the question is: what consequences do this company face, and who will police these or issue penalties given the multiple layers, sectors, and geographies involved? So how to move those suppliers, actor, organism that thinks it is optional and are still reluctant to provide some disclosure to oblige them to report?
Well, I think it's an excellent question. I think that more and more reporting frameworks are being mandatory, even in the US. Hopefully, when it's adopted, and in the EU also soon. So supervision will happen on this front, and there are penalties and there are sanctions not to publish. I mean, if you're not publishing. Now, I would say the next step would be not only to sanction when you've not published, but also, of course, and there's auditing assurance that is provided. I should have said that. But a lot of the legal debate is happening on whether or not in a second stage you may have regulations asking for sanctions if you're not improving, for instance. And this is right now an issue thought about in the EU, but also in Asia a lot. And of course, there are so many debates around that. But of course, in terms of not publishing information, which is the topic today, indeed, that requires auditing and supervision. It's happening in all these countries. It's just that right now these frameworks are entering into force, and before that they were not. So the supervisory experience with regard to extra financial reporting is starting right now, actually. So of course you have plenty of challenges related to resources, related to education of the supervisor as well, related to the complexity of the information that you publish, as you're saying. Regarding the multi-layers of reporting that you have, and supervisory cooperation is going to be key, and that's something that we're anticipating between supervisors, because the SEC and the EU, for instance, will have at some point, and each EU member state authority will have to cooperate on this front to make sure that there are no discrepancies. Because again, the goal here is that information is useful for investors and other kind of stakeholders as well. So you need to follow that closely. I hope that's
Excellent.
answering your question.
No, this is very clear. Maybe just the time for the last one rapidly. There was a question regarding once more the discrepancy, and this relates to taxonomy. Say, taking for instance a company like Airbus that have different programs in different countries, but this is also for a wide range of aerospace company. They operate and they produce outside EU, in China, Canada, US. How the claims for taxonomy will work, or they can be collectively
What do you
claimed,
mean by
or what?
claims?
Claimed,
What
I
do you
will
mean
say
by
claimed,
claims? Sorry.
claimed, claimed, claimed. Claim meaning they could be advertised, they could be disclosed, they could be. What is the rules and benefit expected
Oh,
at
okay.
corporate level? If you have different taxonomy, you indicate, for instance, that this is not the same. The taxonomy is not existing in the States, so maybe you have other type of rules in China. So if this is not consistent, we could claim such, I would say, compliance against the taxonomy criteria.
Yeah, that's a huge question because indeed, I mean, that depends in if taxonomy reporting is mandatory or not. And if there is even a taxonomy indeed. So I mean, in your EU reporting, of course, it's embedded into your financial reporting. I mean, because of the connectivity with financial information. In China, that would be not. I mean, the Chinese taxonomy is to be used only. I mean, only, but in a mandatory fashion when you are issuing a green bond. I'm saying mandatory fashion because the green bond standard, for instance, that will be published in the EU won't be mandatory, supposedly. So the uses of taxonomies are different across the world. And right now, only in the EU and Southeast Asia it is required to publish to what extent you're obeying with the taxonomy criteria or planning to, investing money so you can at the end of the road, let's say, be compliant with the taxonomy criteria. So I would say that's the relation that you have to make between these taxonomy related regulations and disclosures and your broader disclosure framework that you have to follow. And the claims that will make for the taxonomy would depend on each jurisdiction's aspects. I mean, these regulatory frameworks. In the ISSB's proposal, there is no reference to taxonomies for that reason, because you don't have taxonomies everywhere right now, and especially not in the US. But that can be something that you include as part of the transition plan, for instance, that you have to publish for the ISSB. You can say, I'm not taxonomy compliant right now, which is kind of normal. It's obviously, sad in a way because it means that we live in a carbon intensive world, but that's kind of normal that we're not obeying with the taxonomy, but at least what you are planning to do so. That's just an idea, to include sort of like the taxonomy information in your more global reporting. I hope I understood your question well. I mean,
No, no, no,
it goes
perfectly.
into lots of different directions. I mean, you could have a lot of discussions on this only question, actually.
Yeah, yeah, yeah. So I think it's time. It's just we exceed the allocated time. So I would like Charlotte to thank you very much for this really comprehensive lecture that opened the floor on not only to questions, but that has led the people aware of those emerging non-disclosure, non-financial disclosure initiative around the world. As I said, we will provide you to the AG website the slides and the record of that webinar. And I thanks beyond your participation all around the table that took their time to listen to your presentation. And I'm sure we'll continue organizing those series of webinars from the fall and the September months. Many thanks for your participants once more, and many thanks for the attendees this afternoon.
Thank you so much for inviting me. Have a good afternoon.
Thank you.
Bye.